listening from around the world. This is the moment you've been waiting for. It's time! And now, introducing the host, a strength and conditioning coach, real estate investor, athlete manager, and amateur food critic. He stands 5 feet 11 inches tall, and he's on the road to 185 pounds. Podcasting from around the world by way of Albuquerque, New Mexico. Presenting the one, the only, Jared Saavedra.
Hey everyone, and welcome back to another episode of the Road to 185 show. I am your host, Jared Saavedra. Today I got a very special guest. His name is Emanuel Jones. Emanuel is a financial advisor in the Atlanta, Georgia area, and he helps people create sound financial plans for short, medium, and long-term wealth generation. Emanuel dropped so many gems and jewels on this podcast episode. I think you're going to really enjoy it. So make sure you get your pen and paper ready. If you just have an iPhone and get those notes out, you're going to take at least 10 big bullet points with you today. So please welcome none other than Emanuel Jones.
Let's start off by kind of you walking me through how you got into the finance industry.
Sure. So, well, first, my name's Emanuel Jones, the second. And the finance industry has been something I've been in or kind of proxy in pretty much all my life, but in different aspects, right? So dating back all the way to undergrad, finance was one of my majors for my minor, to be honest. And from there, when I was working in the automotive industry, I was a finance director of about 4 or 5 franchise dealerships. So always been fascinated about finance. From there, also went to got my MBA at Emory University and majored in finance there as well. So been fascinated by it on the M&A side, been fascinated by it on just the personal side, been fascinated by it when it comes down to just personal finance on buying homes and buying assets and credit and things like that. So when it came down to the tip of the pandemic and I pretty much left the family business, started out into find out what I wanted to do, like what I wanted to give back and like how I wanted to impact people. I saw an opportunity in wealth management to really kind of bring a lot of knowledge that a lot of people really don't know down to kind of like the layman person. And that's what got me in this field of wealth management on the finance side. But finance has always been a main vein for everything I've done.
Okay. And so from your past and your educational experiences at Emory, how did you kind of transition? Because I know you started off, did you start off in real estate, like primarily flipping?
So I started a real estate firm, investment firm in 2019. So it's only been a couple of years maybe about 3 years now, going on 4, of doing that. And that aspect of it really kind of opened my eyes to, what do you do with all this money after you make it? And not only that, it introduced me to a lot of people that I knew in the same field who were kind of like mentors who were teaching us the ropes of like how to make this money in real estate, and we're in the Atlanta market. The Atlanta market has been hot for 10 years straight. So, I mean, it was it was pivotal for us to really kind of figure out what's that next step. And, I'm looking at, large developers. I'm talking about large developers, big, the billionaires who are buying skyscrapers or building skyscrapers and things like that. So on the highest level, I want to know how they accumulated wealth and what they did with their wealth. So just kind of studying both facets of that kind of led me into, okay, hey, listen, people in real estate need help, because one thing we can do is we can get the money, and that's all we're focused on is the next deal, the next deal, the next deal. And it's kind of like when you make that pocket of money, you just want to look at it because you might go throw it into another deal. But at the same time, we should always be thinking about ourselves. We got to treat ourselves like a business if we're going to be a business. And in business, you always break off a piece for yourself and for your future. And there's certain ways where you can do it that's so tax advantage, especially if you like really good in real estate and you're at the highest tax bracket. There's so many ways where you can break off pieces of that and really kind of put them in vehicles that can increase your wealth tenfold over the course of 5 to 10 years. I talked to a lot of real estate gurus who just wish they knew this knowledge when they started 20 years ago and stuff like that, just so that they could have so much more wealth sitting in different accounts right now versus always looking at just the real estate account. So that's kind of where I fit in and get plugged in with a lot of real estate guys. I'm involved with a lot of real estate groups and do a lot of talks with them and try to explain that aspect to them. Some listen, some don't, but hey,
Well, speaking of that, I know you made a post on Instagram about maybe the differences of working with females as opposed to males. Does that have anything to do with that?
Oh, yeah.
That was a great post, man. That was a great post. I'm telling you. They need to hear this. That's why I had to get that out.
I'll be honest. It's difficult working with men. You know what I mean? And I really think a lot of it has to do with pride. At the end of the day, we don't want to be told what to do, or we try to figure things out on our own. It's kind of like the whole, movie concept, or, it might be real life for some people, where they're driving down the road. The wife is like, can we pull over and get directions? The husband's like, I know where we're going. I got a feel for it. We're going to keep doing. Some people do that with their finances the same way, as opposed to stopping. Maybe we should get a financial advisor. Maybe we should talk to somebody. It's like, I got this. I can make it. I'm the man. Let's go. And that leads to a lot of people down, a path where they don't really need to be going down. Granted, people's definition of success is always up to, for them to define. But at the end of the day, there are better ways to just do things in general. Now, women, I think at a certain point, they suck in a lot of knowledge, and they are always like prepared to try to be better than the next. And, we can go into all deep history about like why that's the case and things of that nature. But right now where we're at and what I'm seeing is that women drastically outnumber the amount of men that come seeking for advice, listen, are diligent, they can budget, and, they don't have to have all the frivolous spending habits that a lot of men do.
That's interesting that you say that, because so in my field in sport performance, it's kind of the same way, where most of my like online clients are like mostly women, and I think it has a lot to do with the ego, and everybody, all men kind of, or most men believe that they know what they should be doing. But so I can definitely feel that. So one thing in my field that I'm super curious about your field in the financial space is there are levels. As you already know, there's levels to this whole entire game. And so like in performance, there's certifications that you can literally just go get in a day or two, while there's others that you need a degree just to apply for the process. Yet kind of the general population, they don't really know that. So in your industry, are there kind of like a gold standard, like certification, license? Like how should people kind of determine? And of course, it's not just about what you have on paper, being book smart. You also have to have some application skills as well. What are the things that people should look at when looking to hire or work with a financial planner or advisor?
Gotcha. First thing first is you got to get rid of the bad actors. A lot of people will call themselves financial advisors when they're not really actually financial advisors. They have a very limited scope of what they can offer. In order to kind of vet that part out, like that basic level part out, there's a website called Broker Check. you can just Google it. It's a website through FINRA, and FINRA is the regulatory entity of the United States government that actually, regulates financial advisors. So you can go there, you can literally type their name in whatever city you're in and figure out if that person actually is licensed, because if they are licensed or have the license and the credibility, then it's going to be listed right there because we have to take those exams. So outside of that, we got that basic level of people who, the bad actors who can't really offer much, but they're kind of coming in this field and they probably have intentions of getting to that point, but they're not quite there. After that, you got to take a series of exams. You have to get your Series 6, your Series 7, your Series 63, your Series 65, your SIE. If you're doing variable annuities, you got to get your variable products in Georgia. That's a whole nother exam there. Over the last probably 18 months, I've taken a total of probably about 5-6 different exams just to be at a point where I can sit here and tell you that I literally am the expert when it comes down to financial planning, financial advising, to the point that I can just charge people to sit down and, let's talk about it. And that comes with a lot of responsibility on my part too. It's a fiduciary duty that's bound by law for me to do what's in your best interest. And if for whatever reason that doesn't happen, then there are actually routes you can take to, get me either it's kind of like being a lawyer. You go talk to the bar association. Like if they're not part of the bar association, but they, graduated law school, that doesn't make them a lawyer. You know what I mean? Right. Same thing on the financial industry. Like if we don't have our, credentials and we haven't taken our series and then passed all the state exams and the national exams in order, then we're not actually a financial advisor. We're just kind of talking. But, that's just things to check right there. Certified financial planners, too. CFPs, they have a high level and a high bar that they have to achieve as well in order to be that. And just, general research when it comes down to it. But, there are definitely...
I don't think a lot of people know those things.
Yeah, I know. Because I know a lot of people who are walking around calling themselves a financial advisor who best thing they're trying to get you to do is just buy life insurance, and they can't do much more than that, which is cool. Exactly. Life insurance is important, but there's so many other things. That's like a small piece of your whole financial scope. So we should never stop there. And if you really want someone to really deal with your money and stuff like that, you should need to have someone who has the ability to. When I first started in this industry, you have to start out going with the company that I went with New York Life. I had to start out with my life insurance license. I told them I'm going to be bored of life insurance within about 30 days. So what's the next things that we can do? Because I'm not here to peddle life insurance. That wasn't the case. But I do know that life insurance companies, big, huge life insurance companies like New York Life and some other ones are, that have been around for almost 200 years, are cornerstones for the financial industry. They predate the SEC. They predate the United States actually regulating trades of stocks and bonds and securities. So they have a lot of insight when it comes down to how they structure their business and gives me a lot of tools. But outside of just the insurance part, they also have the broker-dealer part, where it's the buying and selling of securities, stocks and bonds. And they also have the investment advisory part as well, too, which I believe is the highest level because of the route that I went, where you basically are certified and licensed to advise small businesses and individuals on investments, from individual investments to just investment strategies in general. So,
okay. Yeah, absolutely. So take me through like a little scenario. So say, I'm a real estate investor, just like myself. Kind of take me through your client intake process. Like what are the main questions that you have for them so that you can kind of get like a good financial like snapshot or picture of what, a potential client would look like?
Okay. So real estate investors, they're unique for a singular reason that their money comes in big waves. They will be cash poor for all of 2.5 months and then have, $200,000, after selling a couple properties and things like that. The biggest advice I give for real estate investors is take off a piece for yourself. If you were working for a Fortune 500 company and you went into HR and you sat there and they're saying, okay, how much do you want to put into your 401k? We recommend X, Y, Z amount. And typically it's around about 10 to 15% of what your salary is. When you're a real estate investor, you need to treat yourself the same way. I don't care if it's once a year that you have a big deal and you're just done, or if it happens every month and you have several deals going on. Take 10% 10% of the profits and put that to your future. Now, where that money goes, that really depends on your risk level, your timetable, how old you are, and a whole bunch of things like that. There's no way I can give blanket advice just on that, but definitely something that's going to benefit you for your future. You know, like whether you're putting it into your own self-made retirement accounts, if you're a little bit older, if you're a little bit younger, maybe you want to put in some mutual funds where it can sit over there. Maybe you want some tax advantages and you want to put in something like a variable universal life insurance policy where you can actually invest in the stock market underneath life insurance. That's a different product. That's a little bit better than just regular life insurance for people who are a little bit younger. But yeah, it just really depends on your timetable and all the other aspects about your investor profile and your risk level. But definitely take at least 10% of it and put it in something, which is a big chunk because a lot of real estate investors, like I said, you make that $200,000 profit, you're talking about putting $20,000 away. And I'm looking at you like, yes, that's exactly what I'm talking about. You know, because I'm looking at I know a lot of real estate investors who been doing it for quite some time, and they're still scrambling for the next deal, you know, when they're tired. They've been doing it for 25 years and they're tired, but they need that next deal. They need this to go through. They need these funds. And it's just like you made yourself up to a point that you constantly have to keep scrambling. How about you make yourself up to a point where your account is so big and there's so much money in it that it's scrambling for you. You know, if you got $1 million sitting in the bank account and you're getting on average a conservative 10% interest, you know, by having it in some mutual funds, that's $100,000. You know what I mean? That's $100,000 that's being paid to you. You can chill out for a little bit. Now let's double that. Let's have $2 million sitting in that account. You know, now we're looking at $200,000, and we are financially free. We're not looking for the next deal. The next deal may come, but we have income. And that's the whole purpose. You know, I think a lot of people, when they get into real estate and start churning off that money, I really think a lot of motivation that drives through the real estate, especially on the investment side, is to try to pay off some debt, make some money to pay off some debt because the job's not doing it. And, you know, all the real estate seminars would kind of prove the same point, that's pretty much the majority. So after you get past that point, it's like, all right, now what do you do? You know, and how do you want to set yourself up? And that's why I will really urge people to keep that same enthusiasm, pay off your debt, cool. Get to a point where you're stacking up cash and put some of that cash away to the point where you get financially free. And I promise you, real estate investing will be a lot more fun when you have a $2 million sitting in the bank churning off money for you anytime you want.
Exactly. Yeah, no, I love that answer because it does depend. It depends on a lot of factors. It's just like, again, even in my field of performance, when, you know, it depends on so much, you know, your medical history and your movement and all those types of things, how it relates to finances. It's awesome. So what would you say are like the most common questions that you get from potential clients? So I asked you what things that you want to get out of clients to get more of that snapshot. What are the most questions that you get when it comes to finances?
What about this crypto?
Oh yeah,
that is the number one question that I get. And to like just touch base on it, cryptocurrency is an unregulated investment right now. If you want to call it an investment, I call it a little closer to gambling. But
I agree on the side. Exactly.
Yeah, completely unregulated. And unregulated means one big thing, right? If you have a lot of money, hundreds of thousands and things like that, and you invested in a mutual fund that is regulated, if that mutual fund manager does something unethical, or they just, you know, really just like go against your wishes, or like whatever the case may be, if they mess up, you know, in whatever capacity, you have a suit you can file, and you are insured by the federal government through certain type of entities, and they can take action, and you can be, you know, made whole, indemnified. But if you go into cryptocurrency, as we saw a couple of times, you know, some cryptocurrencies shoot up and then shoot down and things like that, or some just disappear and it was completely fraud. There's nothing anybody can do about that. You know, you can take a civil suit and try to find the company and sue them yourselves and spend, you know, tens of thousands of dollars and try to litigate that. Or you got to eat your losses, and that's just is what it is. So cryptocurrency, to me, closer to gambling right now, but there is a lot of regulation and a lot of talk going around it. So we're going to see some more structured funds that can allow seasoned investors and new investors get into cryptocurrency a little bit more protected. But yeah, that's pretty much the biggest question that I get is what about this cryptocurrency? Other questions is really just like, what do I do? They will ask about like, how do I invest? When do I invest? I've been buying some stocks here. I've been buying a little crypto here, but like, I want to get organized. I want to get structured. Like, how do I start that? What does it look like? And that's when we start diving into, certain type of solutions that can work for them. Because at the end of the day, I want investing for you, whether you're an entrepreneur, whether you're a corporate person, I want investing to be seamless. The same type of, pattern that we get in with 401k where it comes out my check and I almost forget that it's even coming out and I just get used to living off whatever shows up in the bank account after a while. But you're still stacking up a little fund right there. The same mentality we have there, we need to have on some of our outside investments outside of whatever company that we're, getting our 401k through. Because a 401k was never meant to be the sole retirement vehicle. It was supposed to supplement, and in our day and age, as we get older, the fact that Social Security is getting slimmer, the fact that pensions don't even exist in like the majority of companies in the United States, is going to be more prudent for us to make sure that we organize some investment strategies and money goes into it so that we can fund our retirement, or we're going to be working till we die.
Yeah, that's exactly it. I actually got another question on the IG. So when I posted that I was going to be interviewing you, and it kind of goes along with what you just said. Someone wrote in, in 2022, should I invest more into stocks or real estate? I know you kind of answered that. But what's your thoughts on that? I mean, are you kind of scared?
Question.
Yeah, of course. Like, so right when I posted and I got it, I was like, oh man, I'm sure, it's going to be one of those. Of course, it kind of depends. But, I mean, do you feel like a crash is coming? Do you feel, what's your kind of like philosophy or kind of plan if that were to happen? What are your thoughts on that?
Okay, so one, crashes are unavoidable. There's nothing you can do about them, outside factors. Two, I'm going to assume a relative age gap that person has. I'm going to say they're probably somewhere between 25 and 38, millennials. I don't know if they are, I don't know if they're not, but like I get that question a lot, mostly from that age group. And honestly, invest in both, definitely both. Don't be afraid of crashes, because the money you're investing, you should not be trying to live off of later. It shouldn't be money that like I'm putting it in there and then I need to pull it out next year, or I need to pull it out in 2 years. If we're investing for the long term, the stock market goes up, it goes down, it goes up, it goes down. But I will promise you, and I looked at it for verbatim for myself, if you look at every single crash that ever happened in the United States all the way back to the Great Depression in the 30s, you will see that the 2 years following those big crashes were the biggest gains that the stock market has ever seen. And the reason being is because as soon as crashes happen, everybody in the world panics. All the regular people in the world panic, let's put it like that. And they start selling it off. Mom and pop investors, older people who probably should have had their money in fixed income, but they had their money in stocks and stuff like that. Like all of them, they start panicking, selling off, cutting their losses, and just taking the losses and running and putting their money in the mattress because they're scared. And then what happens is all these big hedge funds, billionaires, they have all this money sitting on the side and they come and buy up all those stocks at a discount. And they have the biggest gains over the next 2 years after big crashes. So I would say if you are around that age, if you're around that millennial age, and there's like a good 15 to 20 years of you working, invest in both. Definitely need to have a stock portfolio going up. That's the biggest hedge against inflation. Inflation is something that's very important that people should attend to right now, because inflation was the highest it's been in 20 years. Actually closer to 30 years, actually, just now. That means the value of your dollar sitting in your bank account has just now gotten less. Everything else is going to go up in price, and your dollar's not going to be able to stretch as much. But had you been in the stock market over the last couple of years, you would have recognized, 20, 30% gains each year based off that same dollar, and you would have been way ahead of where inflation is right now. The biggest hedge against inflation are common stocks and companies. So you have to get in that game. You cannot avoid being in that game. Real estate does not mean taking away from that. I don't care if you have an account set up where it's just putting $500 a month into, a stock portfolio. You do that over, 20 years, it's going to be a significant portfolio. $500 a month is not going to stop you from buying real estate, is it? If you're $500 away from a real estate deal, then you need to talk to the seller and tell them to come down $500. It's not going to stop you from doing that. You need to do both. And real estate, on the other hand, is also a job. It is not passive investing. I think you can attest to that, Jared, because you're getting deep in this game right here. It's not passive investing. Right? There's nothing passive about it. It's a job.
People just see HGTV and they think that's just how it goes every time.
Hell no. There's always an issue. There's always a problem. You're being your own contractor too. I'm sorry, I don't know if you talk about your personal business here and stuff like that.
Yeah, absolutely.
Okay, cool. So you're being your own contractor. You're dealing with each and every single subcontractor to build to fix this house up. And then say, all right, I don't even want to fix houses up. I just want a whole bunch of rental properties. Cool. Go out and buy a whole bunch of rental properties. Now you got to make sure your property management company is on point collecting rent. And you saw over the last 2 years where there's been basically a hiatus on all evictions. So you had people sitting in homes where you could not evict them. They didn't have to pay nothing, and you're going to have to be paying all the bills because banks didn't stop, collecting because they were foreclosed on your stuff and then take it. So, certain things like that, certain risks that come with it, too. You got to be prepared for that. If you got the energy for it, if you got the time for it, by all means. But a lot of people who are, hardworking in their job that they're doing, excelling in their job, whether they could be nurses, doctors, IT professionals, security professionals, things of that nature. The best bet for them, in my opinion, is focus really hard on your job, make more money, and sticking in some portfolios if you have enough time where you're not going to need that money. Now, if you want to start dabbling in real estate and get into it, be prepared to spend time. It's not going to be just I dump money in and it's going to work for me. Be prepared to spend time in it, learn the game diligently, and then get into it, responsibly, preferably probably with a partner.
Yeah, exactly. And I do that with my wife because I would have probably made some foolish mistakes had I not had her, for sure.
Yeah, having two eyes on it definitely helps.
Yeah. What would you say, maybe a misconception that you see, kind of people's behavior as far as, it kind of makes you cringe. And I'll give you an example. So, 5 years ago when I took out a loan for my equipment at my gym, I got it at a really good rate, 2.9%. I think it was around $35,000 for this loan. And I was just so obsessed with, paying it off because I felt like, I want to be debt free. I don't want to have debt. I don't want to have debt. But at the end of the day, it was only 2.9%. And that could have, obviously the money that I was paying off my debt, that could have went into the stock market. That could have made me a lot more money. That could have been working for me. What are some other type of behaviors that you see from people that just kind of makes you cringe when you see it and you're like, man, if you only knew, if you just changed that one little thing, this could change your entire future. What would you say is the most common?
Well, piggybacking off your personal loan for the equipment, student loans as well. A lot of people are very obsessed with their student loans, getting those paid off. But if your student loan is underneath 5%, then you pay what you need to pay. You definitely don't want to mess up your credit or anything like that. But it is not a huge race to pay off that cheap money. That's what we call it. When there's a low interest rate, assigned the money is cheap money. So it shouldn't be a rush because that same money put into the market over the course from average on 3 year averages could definitely probably churn off 10 to 15%. And the difference between that, that 10% difference, let's see, difference between 5% and 10 and 15%, 10% difference, is just more money in the bank for you. Now, honestly, that interest alone can, keep paying your student loans down. But that's one. But I guess the biggest thing that makes me cringe is when people, when they get serious about their finances, they start stacking up so much money in their savings account. And I see so much money in savings accounts where things are just such low barrier. Or if anybody ever mentions a high yield savings account to me, I might lose it because there's nothing high yield about it. This shouldn't even be called that. It actually should be illegal because people get bought into the fact that they think it's a high yield. So yeah, that's probably the biggest thing that makes me cringe. Just money sitting stagnant, not doing anything. It's kind of like I think of your money as a member of your household. And it's just sitting there lounging around, not contributing to any chores. It's not washing any dishes. It's not doing anything to help you out. It's just sitting there just freeloading in your house. And you wouldn't have anybody just doing that in your home, from kids to family members to friends or anything like that. So why was your money going to be sitting there having no job and not doing anything? Everybody should be contributing to the lifestyle, and your money should be too.
Perfect, man. Great episode, man. I won't keep you any longer, dude. I really appreciate the time. What are some ways some people can get a hold of you if they want to connect with you? What's the best way?
Sure. Instagram is at Mr. Jones Finance. You can go on Instagram. My link is in the bio where you can go in and get in contact with me through my New York Life page, or you can hit me a DM there.
I'll have all this
really
information
open
as well in the description as well.
Yeah. People know social, so like you go through social. You know, when you go to my New York Life page, my number's there and all that. I won't bother getting it over the podcast. You know, people can find it if they really want it, and just go from there. But I would just say, you know, people just like, as we go into year 2022, like just get serious, even if it's not a huge deal, even if it's just like sticking to saving a couple $100 a month. Just get serious about your finances and then start progressing from there. Don't be daunted by the fact that you feel like you're behind, or you feel like I should have started this, or like, you know, I just don't know what to do. The worst thing you can do is do nothing. So that's what I'm here for. That's what I try to advocate for, and that's what I will hope that people take moving forward.
Yep. If you're listening, definitely get a hold of him. You have any questions, you know, slide in the DMs. He's super helpful and is always encouraging, man. Emanuel, I appreciate you, bro.
Absolutely, Jared. Anytime.